Welcome to a Mackenzie Institute Long Talk.
Adam Aptowitzer is a lawyer who thinks about charities all the time because he's a tax lawyer and has to deal with such things for charities. We're only thinking about charities now because of the pandemic. People are in need. There's no more government money left, apparently. So we thought we'd find out how we can help, if at all. Adam, thank you for your time.
My pleasure.
Now, first of all, we hear the terms charity and charitable and nonprofit and not-for-profit, but those are different things. Could you give us the high-level definition?
Sure. Well, the distinction really lies within the Income Tax Act, and for practical purposes, the difference is that a charity is one that can issue charitable donation tax receipts, and a not-for-profit cannot.
Okay, so let's talk about supporting those who are in need in our society. Since many of us aren't carrying much cash anymore, not just because we don't have much, but because it's a cashless society, we can't give to people on the street, so we have to give to institutions. If we give cash and get a taxable receipt, there's essentially no net benefit, is there?
No net benefit to whom?
To me as the donor. If I give $100 and then get a tax receipt for $100, isn't that a wash when I file my income tax?
Really, it depends on your tax bracket. In most of the provinces, at the highest tax bracket, the tax you would pay on that $100 you've earned is offset by the tax credit you earn by giving away the money. When you're not in the highest tax bracket, you actually have a small benefit from every dollar you give over $200.
Okay, so let's just pick a rough demarcation line. If I earn less than X, I am going to get a greater benefit for that cash donation to a charity. What is X defined as?
X is defined as the lowest number of the highest tax bracket in each province and federally.
Okay, can you give me a rough number for that? Does it vary so much that that's not possible?
Yeah, it does vary from province to province. It's really not easy to put a number on it. I'll tell you, the federal government, for example, because everyone's affected by federal taxes, has a different type of system where if you are at $200,000 or more, you have your gift will offset the taxes at that highest bracket. When you earn less than $200,000, I think it's somewhere around 150 to 200. You will also you start to earn a little bit more. You start getting a bit more of a credit than the tax you would pay, and that increases as you earn less income.
Okay, so let's say everyone watching should check the local conditions in the province in which they reside, the level of income they have, and check with their tax or financial planning advisor. So let's now move to something else. There are a lot of different trends in this pandemic, including people retreating to the suburbs, retreating to vacation properties, downsizing, retiring early. A lot of different life decisions are being made. And one might be how to dispose of such things as all the books behind me or the books behind you, furniture that isn't needed. In other words, are these things called gifts in kind?
Yeah, first of all, I don't want to get rid of my books. I'm very attached to them. But I'm sure you are to yours. Yes, anything that's not a gift of cash is a gift in kind to a charity or to anybody else for that matter.
Now, how would I go about evaluating used books? How do I and the charity negotiate that deal? Must we get an independent appraisal, or should we go to a used bookstore or eBay, or how do you make sure that you've picked the right number?
Well, again, assuming the gift is to a registered charity and assuming that the donor wants a tax receipt, then it is incumbent upon the charity to issue that receipt with the proper estimation of fair market value of the item. Now, if it's a case of books or something less than $1,000, the CRA understands that you may kind of come up with an estimate based on your based on the charity that is experienced. So it may be able to look at another used bookstore, or if it's a car, look at the Blue Book value or something like that to come up with a pretty good idea. But the CRA does require that for items of a higher ostensible value on at least an inspection, or certainly the amount on the receipt, that the appraisal be provided by a qualified third-party appraiser. And books is a good example. Sometimes people have used books worth millions of dollars, and sometimes people have books that you can't give away, and so you need a third-party appraiser with experience in the area to really understand the difference between them and come up with a reasonable, logical, and defensible valuation for the charity to use in the issuance of the receipts.
Well, I know that lawyers, especially tax lawyers, are into specifics, and we ex-journalists are into sweeping generalizations, but let's try to compromise. If it gets above $1,000, you should start thinking about an official appraisal for the item. And if it is an oddball item, such as rare books or rare wine or an antique or something, same thing is true?
It's all the more true, I would suggest. Certainly the CRA's rule is $1,000. They want to see a valuation. But when you get into these, what you call oddball items, and everything's oddball to somebody, it's a more difficult argument to make that you've got the right appraisal. Wine, as an example, could have very interesting markets, particularly in a country where, in most of the country, the sale of alcohol is regulated. So coming up with what should be the appropriate valuation can be at least much more difficult for people that don't know anything about wine.
And who is responsible for getting this independent evaluation? Because now I'm thinking like a crisis manager, that the donor gets in cahoots with somebody to evaluate something at a higher value and hoodwinks the charity. So who is responsible for getting this independent evaluation?
The charity. The charity. Fundamentally, it's the director's responsibility.
Because they've got to live with it and they've got to defend it to the CRA, right?
Yes, and more to the point, directors can be personally liable if they knowingly or with, let's say, willful blindness, allow the charity to issue a receipt which does not have the proper valuation.
Now, if you incur an expense for a charity, you are going to drive out there and hook something up or do something for them, and you incur a lunch and mileage and what have you. Can they issue you a tax receipt for that, or what's the procedure?
Well, a charity cannot issue a tax receipt for services, but if you incur an expense on behalf of the charity, so such as you were suggesting, gasoline or say a mileage charge, I would suggest there's a difference between them, but let's just go with gasoline for a second. So if the individual is volunteering on behalf of the charity or incurs an expense on behalf of the charity can reimburse for that amount. Now, what is the recommended way of dealing with that is that the charity would pay the individual for the amount of the expense, and the individual would then donate the money back to the charity. It doesn't always work that way. There are circumstances where it's not feasible, but generally speaking, it's an exchange of checks.
Now, the so-called exchange of checks, which I've been hearing about for a long time through interacting with charities, this is essentially no net benefit, because the whatever the charity pays you for that expense should be treated as income on your own income tax, and so it's a wash in most tax brackets, isn't it?
Well, in the example you gave was a reimbursement of expenses. An expense doesn't become a reimbursement of an expense is not income to the individual, and so there is no. So I suppose in that circumstance there's definitely no net benefit, but for a different reason. In a circumstance where the individual has income in the year of, let's say, or sorry, let's do this a little bit differently. The individual is a painter and paints the church, and the church then decides to pay the invoice, and the painter returns the money to the charity. In that circumstance, there's also no net benefit because, again, at the highest income tax brackets, the tax credit earned offsets the tax paid. So in that circumstance, there's no tax benefit.
So if the painter invoices a charity, charity pays the painter gives the money back to the charity and gets a tax receipt, there's essentially not much net benefit in most tax brackets, correct?
Yes, that's right.
Okay. Now let's talk
Well,
about...
sorry, let me, if I may, it's not most tax brackets, it's at the top tax bracket. At the lower tax bracket, so that is to say most tax brackets, there actually is a small benefit because the credit is actually at the highest rate and the tax is at a lower rate in a lower bracket. So in most brackets, there actually is a benefit. It's only at the top bracket that there's no net benefit.
So again, you check your local conditions in the province in which you reside and check with your accountant, tax lawyer, financial planner, what have you. By the time you do all that, you aren't going to have any money to give to charity anyway. However, to get serious for a moment, there are all kinds of other people who can, other than painters, who can donate time. Mechanics could repair a Meals on Wheels vehicle, or carpenters could do some work. Tax lawyers can do some work, etc. So what do you do with kind of intangible services, things that are done by the hour, and you can't point to, oh, look, I painted that church, but I did spend a couple of hours. How is that treated?
Well, I mean, it's up to the parties. When I volunteer for a charity, I'm volunteering. I don't send them a bill. I just volunteer, and the charity's under no compulsion to send me a receipt, so they're fine with the fact that I haven't asked for one, and in fact they couldn't give one anyways. So that's one way of dealing with it. The exchange of checks is another way of dealing with it. But it really is between the parties.
But if you did ask the charity that you've donated time to for a tax receipt, could they issue one based on the value of your time?
No, they could not. But again, if they paid me for my work and I turned around and donated it back, they could issue a receipt for that. And of course, we're ignoring the impact of HST in all this.
Right. Now, let's get to one more thing. There you are in your office with perhaps a boardroom, ancillary facilities. You may even have staff. You could have all kinds of things in your office. If the charity needed use of your boardroom on occasion, can you quantify what that value is and receive a tax receipt for that donation?
No, I could not. Now, if I, again, billed them at a fair market value rate for the use of my office, and then donated that money back to them, then that would be something that would be we could contemplate. But in a circumstance where I'm simply allowing them, I'm providing them the service of using my space, there is none. I suppose the interesting question becomes things like hotel rooms, where it's inventory to the hotel. But of course, we're not getting that deep into it, so we'll let the hotels figure that one out on their own.
Okay, and then with your hypothetical boardroom, that's the exchange of checks and probably at your tax rate, no net benefit.
Yes, that would be a fair assumption.
All right. Now, what is your advice for people in this pandemic who are trying to figure out a way to either do some good or change their personal circumstances, and they might be able to involve a charity? They might want to retire and do maybe Zoom lectures on a regular basis for a charity for youth to get into the job market. Any general advice along those lines?
Well, from a tax perspective, about ways to sort of organize themselves. It's interesting you should mention that. I mean, under normal circumstances, I'd say, look, just go and get involved and, come what may. But what's very interesting is that people do not fully appreciate the extent of their assets. And what often happens is people die holding, $100,000 shopper, 100,000 shoppers optimum points, or Canadian Tire money, or a collectible that they receive from their grandparents, and then the kids get it, or in cases where like loyalty program points, they can't be passed on as an inheritance. The value then either is lost by virtue of the technicality of the program, or lost because the individual inheriting it does not realize the value. Indeed, the person owning it may not have realized the value either. And so a lot of value can be unlocked by asking more broadly, what assets do I have that somebody else may be interested in? And then when it comes time for, obviously you can give those away in life, but when it comes time for estate planning, one of the interesting things to do is to arrange to make gifts of those things at death. So that, again, leaving aside from it the possibility that a loyalty points program would not allow the points to pass in that way, but making plans for the passage of these things on death to create the tax credits that we really need on death in order to protect our assets, the assets that our children really want, and let it flow to them.
Well, Adam, you're a tax lawyer and are in this every day. I'm not, but I have had an interesting experience with some of these loyalty programs with hotels, because I travel a lot in my business. And if you don't use them for a certain period of time, you lose them. But if you call up the hotel and said, gee, I'm thinking of staying with you again, well, they'll give you double the points to come back in or something. So there is nothing, I don't think, that can be done without significant administration, would be my take on that.
Yeah, but you bring up a very good point. Like, if you have the points and they're about to expire, and you know that a charity could use them, then it's only a couple phone calls in order to transfer those points, again presuming they can be transferred, to a charity that could issue a receipt for them, and so you can benefit from the receipt, and the charity can benefit from the points. So there are ways to do that.
And then instead of, sometimes there are collections taken up of these little bottles of shampoo that you can, are you taking them or stealing? I'm not sure. You're not a criminal lawyer, but that you take from hotels and you give them to women's shelters and what have you. But with the points program, the people running the shelter can go over to the drugstore and buy in bulk, and probably that will be much more beneficial.
Well, yeah, I mean, and there's various organizations out there that use these things for different purposes. I mean, one may not think of using Shoppers Optimum points to Ducks Unlimited, but for all I know, Ducks Unlimited, can buy very useful items at that store for their programs. So, I mean, it's hard to know for sure.
I would absolutely bet they can. If you're going out into the woods, into the swamp, there's all kinds of stuff that a drugstore could supply that you would need. Adam, very interesting. One of the challenges that I have is that, not being an expert or even knowledgeable in this field, I never know if I've asked the right question. So the last question can go to you. What would you want to ask you if you were interviewing yourself?
That's a great question. I wish I had a little advance notice that you're going to ask me that one.
In other words, what did I forget to bring up?
Yes, no, I understand. What I think, I would underline actually that point about using all of the assets at your disposal. One of the things I've started enjoying doing during this COVID thing, maybe a guilty pleasure, is I've enjoyed reviewing estate auctions online, downsizing and estate auctions, and it's amazing the kind of things that people are selling, and oftentimes that you get the impression that it's if somebody's passed away and people are just trying to offload things, and there's a lot of value there that can be donated to various important places that may be interested. I myself heard of a story where an individual was at Value Village and picked up a stamp album that somebody had donated. Value Village clearly didn't know about it, and they bought it for like $6, and the stamps there go all the way back to Confederation, and include stamps from around the world, from Russian Revolution, the Ottoman Empire, countries don't exist again. I mean, it's worth, who knows, hundreds of dollars, at least thousands of dollars, quite probably. and potentially much more than that. And if the family had known what they had, they may have wanted it, or they may have donated it to a charity that was interested in such things, could resell it. And so I really think that the discussion about what assets do you have with a family member has to include things like, what hobbies did you have as a kid? Did you collect stamps or comic books or baseball cards? Because really, there's a lot of value there that can be profitably given to charity for them to use, add to their collections, or sell and support their programs.
Well, I must say that's an interesting angle that I hadn't thought of, and it may well be a way to do well and do good in this rotten time that we're in. Adam Aptowitzer, thank you very much for your time.
My pleasure.
Any views expressed here are not necessarily those of the Mackenzie Institute, its speakers, sponsors, or supporters. But the Institute is dedicated to fostering public discussion, debate, and education about security matters. Google the Mackenzie Institute to join the discussion. The Mackenzie Institute is grateful to its sponsors and supporters. Some of our short pods and long talks are a result of the support of Heathbridge Capital Management Limited, the National Post, and Dundurn Publishing.